Hello everyone, welcome back to the channel. I'm back with another video on Enbridge. I was hoping to do a video on other dividend paying stocks, but Enbridge continues to stay in the news with a recent purchase that they've announced just yesterday. So I want to talk to you guys about that a little bit, get into the details of what exactly they have purchased, and talk about what I like and what I not like so much about this transaction. Okay, let's get into it. So, Enbridge has bought three gas utilities from Dominion Energy in the US. They are East Ohio Gas, Questar Gas, Public Service of North Carolina. So, what exactly are gas utilities? They are local distribution companies that own and operate the systems that deliver natural gas to your homes or businesses. The gas utility, such as East Ohio Gas, that one of the three that they've purchased, owns the infrastructure that delivers the natural gas to homes and businesses and shops and such. So that's what they've purchased essentially. The total cost of the purchase is about $14 billion. How that's divided is $9.4 billion is to be paid in cash, whereas $4.6 billion is to be paid through issuing of new shares. So I'm not too worried about the payment in cash. In fact, I think that's okay because cash sitting on the balance sheet without any growth is of no use. So they've put the money to work by buying assets that will continue to produce cash flow for them. And these underlying assets, the gas infrastructures, will become more valuable over time. Natural gas is a cleaner form of energy, and a lot of people are very much bullish on nat gas in the coming years as we transfer over from crude oil into other forms of energy. So this was, I think, a smart decision to purchase assets that will increase the cash flow over time. Where I don't like this deal so much is the issuing of the new shares. In fact, as I mentioned, $4.6 billion is to be paid through sale of 89,490,000 common shares. So what Enbridge is essentially doing is that they're diluting current shareholder value by issuing these shares. Current investors are going to see a decrease in the value of their current holdings at a time when the stock has already plunged more than 10% from its highs. So that's really the downside for me, is that in the near term, we're going to see a dip in the share price. So all current shareholders, such as myself, will notice a decrease in total value of our shares. I think it'll last for maybe a month or so before we see a trend higher up back to the $49, $50 Canadian dollar range. But for now, we're about 5% lower from where we were. The deal will close in 2024. Greg Ebel, who took over from Al Monaco in late 2022 as a CEO of Enbridge, has really put his prints on the company with this acquisition. I just want to read a couple of quotes from Greg Ebel about this transaction. Quote, "What we're telling investors and what I expect will play out here is investors are really going to like the returns that we're able to generate in this business." End quote. So he's optimistic, it seems like, from judging by this quote. Second thing he had to say was, and I quote, "We have a transaction that represents a rare and unprecedented opportunity to acquire high-quality, growing natural gas utilities at scale and at a historically attractive valuation. A gas asset package of this size has not hit the market in at least a decade." So it seems like he is very much optimistic and happy about this deal. He feels like the return on investment will be very lucrative for the company and for its shareholders. So it's a very big deal for him in making this acquisition, and we'll have to see how it turns out in the coming months. Thank you, guys.